When you look at the Bitcoin market right now, it seems incredibly calm. But what if I told you that just beneath that still water, two massive forces are locked in an epic battle for control? Well, in the next few minutes, you're going to find out exactly who's winning. For weeks now, the price has just been stuck. It's been bouncing around between, say, $85,000 and $90,000. All the volatility has just kind of vanished. And it really feels like the market is holding its breath. But this quiet, it's the perfect setup for a huge move. The only question is, which way is it going to go? Because, yeah, what if this quiet is actually hiding a giant tug of war? That is exactly what we are going to dive into. In this explainer, we're going to pull back the curtain on two completely opposite stories that are playing out right now. One is a pretty serious warning sign, and the other, well, the other points to a fundamental change in who actually owns Bitcoin. Okay, let's start with story number one. This is the big warning sign, and it's coming straight from the world of short-term traders and speculators. This is the bearish argument. So, to get this, you have to understand what a long position is. And don't worry, it's super simple. It's just a bet that the price of something is going to go up. Traders use these all the time, often with borrowed money, to try and juice their potential profits. And this is where it gets really interesting. Right now, these long positions are at a 22-week high. What that tells us is that speculative traders are getting extremely confident that the price is about to shoot upwards. They're all piling in, getting ready for a rally before it's even started. But here's the thing about history. This level of optimism, it's often a huge red flag. It's a contrarian indicator. When literally everyone gets this bullish and the trade gets super crowded, the market has this nasty habit of doing the exact opposite. Time and time again, big spikes in these long positions have led to price pullbacks, not rallies. It's almost like the market is set up to punish that early overconfidence. And there's one more piece to this bearish puzzle. The number of new buyers coming into the market is starting to flatten out. The data shows that fresh buying pressure just isn't what it was. So think about it. You've got this huge pile of risky, leveraged bets on one side and slowing demand on the other. That makes the market really, really vulnerable to a correction. But while all those speculators are placing their bets, a much quieter and honestly a much more powerful force is pulling in the complete opposite direction. This is story number two, and it's a huge, long-term story about a massive shift in who is actually buying and holding Bitcoin. This is the bullish case. Now, to really see this shift, we need to look at a metric called realized cap. Just think of it like this. It's basically a receipt for every single Bitcoin out there. It tells us the exact price each coin was bought at, so we get a true sense of what people actually paid, not just what the price is today. And check this out, because this chart says it all. These new whales, we're talking institutions, ETFs, the big money, they now account for nearly 50% of Bitcoin's entire realized cap. I mean, just for context, before 2025, that number was almost always under 22%. This is a seismic shift. It means nearly half the money in the whole network has come in at these higher, more recent prices. So you might be wondering, who's actually buying right now during all this uncertainty? Well, this data makes it absolutely crystal clear. Look at that top row. In just 1 week, whale wallets added another $135 million to their stacks. And at the exact same time, look at the bottom two rows. Smaller retail and mid-size wallets were selling off their coins. The big players are just systematically soaking up every single coin that smaller hands are letting go of. The key point here is that this isn't just some blip on the radar. This is real, hard evidence that the entire structure of the Bitcoin market is fundamentally changing. We're watching it move from a market that was all about these wild boom and bust cycles to one that's now defined by steady, sustained institutional buying. So, how on earth do we reconcile these two completely opposite stories, right? You've got this buildup of short-term risk on one hand, and this powerful long-term shift on the other. Well, for that, let's bring in an expert take from Fundstrat. They're a super well-respected research firm that knows both traditional markets and crypto inside and out. Their internal guidance to their clients really just cuts right through all the noise. And they say this is a correction, not a collapse. So they see that short-term risk from the speculators. They totally get that a pullback is likely. But, and this is the key part, they do not see it as the start of some new long bear market. When you dig into their analysis, they call it a tactical reset. It's kind of like a controlled burn in a forest. You have to clear out all the dead wood, all that short-term speculation to make way for new, healthy, long-term growth. They see things like tighter liquidity pushing the price down for a bit, but they actually frame this pullback as a necessary, even healthy setup for the next major rally. All right, let's tie all of this together and figure out what this new reality for Bitcoin actually looks like. So here's what it all boils down to. First, the market is literally a tug of war between jumpy short-term traders and these patient, long-term institutional buyers. Second, yeah, the risk of a price correction in the near future is very, very real. But third, and this is the most important part, there is a deep structural change happening as these new whales just keep absorbing supply. And that changes the entire game. It's the sign of a market that's finally mature. And that really just leaves us with one final thought. The real question isn't if Bitcoin's nature is changing anymore. The data is pretty clear that it already has. The question now is, how do we, as observers and participants, adapt to a market that is finally, after all these years, actually growing up? Hey, if you enjoyed this breakdown and want to stay ahead of the curve, make sure you hit subscribe so you don't miss next week's explainer.